it's going to be a very different picture. So now, somehow, you now need to calibrate your attention, maybe kind of focus right now on the turnaround stories. Because we already know the companies that survived it. The companies that survived are not exactly doing a great job within the pandemic because of their businesses, property developers, as you mentioned, conglomerates. But when we see a turnaround, in my personal opinion, these are the stocks that will lead the charge. Property and conglomerates. They will lead the charge, and that's the reason why when you say strong accumulation, I'll probably be nibbling into those.
Okay, hi everyone. We are in for a very special treat today. We have your favorite legendary investor. In my opinion, the Ray Dalio of the Philippines. We have Rex Mendoza joining us in the show. Hello to you, Rex. Hope you're doing good and well.
Hi, Marvin. Awesome day, everyone. Great to be here. Great to be part of the Marvin Rockstar Show.
10 months na since our last video, no? And when we did that video, we were talking purely, I think mostly Philippine stocks and konting Tesla. And I want to go through all of those things also as we share and talk about your insights in the market. So first things first, our favorite still, syempre doon tayo nagsimula lahat, the Philippine markets. What's your take on what's going on right now?
There's been a lot of, news regarding obviously the pandemic, COVID-19. It's still the driver of movements, right? But little by little, I notice certain things changing. No, look at your charts, Marvin. Overlay the COVID infections and overlay the quarantine protocols. Whenever an ECQ gets announced, market drops, and then they kind of move that into an MECQ. And a GCQ, the market recovers. Because mobility is actually the driver of the economic recovery. And then all of a sudden, another ECQ, then it drops again. But notice this last ECQ in August. Right the day that they announced it, the market was up. So I think people are now beginning to look beyond it with the vaccinations that are in full gear, with hopefully some level of herd immunity by the end of the year in Metro Manila. We're probably gonna have a better Christmas than 2020, and then moving into the first half of next year, people are now looking at 2022. So the recovery year that would have been 2021 did not happen. We're not in the doldrums, but it's still a very tentative, skeptical market. But I guess people are looking forward to 2022. So we're October now, and we all know we have to position if it's not going to be, in a few months, if that's going to be the horizon, then the positioning is now starting to happen. That's what I believe. So I think it's now ripe for real accumulation. In the last video that we had, I always say, selective accumulation right now. It's not the same. It's going to be a little more confident accumulation, so to speak.
So let's assume maybe the timeline is long for those investors. But when they start to accumulate, I think there are certain stocks that have done well this year. And because they're really part of the new normal, Converge, Globe, CNPF, Pure Gold, also ALLHC, the Rex Mendoza portfolio stock list, they've done pretty well, but their prices now are higher. Then you have the ones that the too big to fail companies naman, they've done okay, the conglomerates, the banks, and the property development. What should be the focus? Should it be the ones that are still relevant now but they're higher, or the ones that they'll be good after this pandemic, but they're lower right now?
That's a fantastic question, Marvin, because it goes right smack into a bit of a change in perspective, right? Because I could have said that when we had, our video 10 months ago. It's more like the ACE-N All HC, Pure Gold, the telcos, right? I think that's how we discuss things because they're gonna thrive given that situation. But now, if we're going to be looking at 2022, we're looking at vaccinations at about 650,000 to 700,000 per day. It's going to be a very different picture. So now, somehow, you now need to calibrate your attention, maybe kind of focus right now on the turnaround stories. Because we already know the companies that survived it. The companies that survived are not exactly doing a great job within the pandemic because of their businesses, property developers, as you mentioned, conglomerates. But when we see a turnaround, in my personal opinion, these are the stocks that will lead the charge. Property and conglomerates. They will lead the charge, and that's the reason why when you say strong accumulation, I'll probably be nibbling into those. Other than, let's face it, I'm already positioned in the stocks that already did well. No point buying them at these high prices because my average for them is pretty low. Now, I look at what's gonna be the turnaround story because this is where you see the bargains. They haven't moved up yet. There are companies, I don't know if we can, if it's okay to mention them, like, of course, AC, GT Cap, these are names, even SM Prime and Ali. They've been badly battered because the malls are closed, right? So it's almost like, think about this. I always tell friends this. In 2008, in 1997, all of these property developments crashed. They were nothing. Who carried the load? Malls. Malls were your cash flow creators. Malls were your go-to revenue drivers. Today, it's actually the malls that are negative cash flow. Property development is still okay. So if you're going to be looking at mobility and the comeback of mobility, then hopefully the malls, hopefully a little more later, the resorts and hotels can follow. So property and conglomerates can be the next big thing when the recovery really happens.
I want to drill in deeper with that, no? And you mentioned GT Cap, which has exposure to real estate, AC, which has a lot of real estate, SM, real estate also. I want to make sense of this because we get a lot of questions about this. There are vacancies right now, especially close to the CBDs, primarily because some really left or some offices employed work from home. How do you think will be the impact of this to these property stocks? And given that you have a larger exposure and experience in this particular space, how will this come back, or at what rate will people start going back to condominiums, etc.?
We have to accept it. No, there would be a portion here that will never come back. Especially the smaller ones. I think let's just face it. Some of them really died out, right? However, there would be operations that are just waiting on the sidelines. They're alive. They're in hibernation. And there is another group that still continues to operate because they probably would have strong balance sheets and they can, just to keep their employees holding on to jobs and getting salaries. They keep on, somehow pivoting just to make sure that the bloodline is open. So of all these three, the second and the third, those that are in hibernation and those that are still struggling but still there and surviving, these are the guys who will carry the charge when mobility starts to move. They are there and they're not exactly gone. Now, there will now be a balancing act because I think we all know the digital side, with the Shopees and with the Lazadas, they're already there and they have captured part of that volume. Now, many of us probably won't go to the malls to buy certain things that we buy in these outlets, these online trading platforms. But let's face it, if you're going to be looking at certain malls right now, there would be people now who are going to be positioning themselves to offer stuff that can never be offered by Lazada and Shopee. And that's the social side. How many households in the Philippines don't have air conditioners. I mean, we go to the malls for the air conditioning. We dine there. And I guess that's what we also will be seeing. No? Maybe a little calibration of the low-end shopping. Yun ang mawawala. That will be online and digital. But the high-end, the brand experience, so to speak, and most importantly, the dining. Can you just imagine, ikaw, will you order to eat at home? Or if you're given the option, will you just dine in the restaurant so that you don't have to wash the dishes after? So there is a need for this. So kailangan hanapin natin yung mga bits and pieces na yon. And when you put them all together, you know that we probably would have valued all of these property companies and corrected, their mall position. Like if you're gonna think about that business line, it's bleeding. So we practically discounted that side. But that's the side that becomes valuable later on when the market turns it. So from zero, that might account for something, right? So I remember telling you that there was a time when, obviously a lot of people saw GCash as a drag to Globe's profits, but nobody thought about valuation. Now, when people realized that, you saw how the share price surged, right? So ito yung mga, it's public information. I'm not saying something that's, a secret. Everyone knows that. But somehow it takes a bit of time for people or investors to digest information. So if you can do that a little ahead, so much the better.
There are certain companies still connected to the market that are hit also. You have the fast food chains, the casual dining chains, Shakey's, Max, Jollibee. Then connected also to that, the hotels, the Shangri-Las, etc. And then also the airline companies. Given that we will have mobility, as what you've mentioned, because of the vaccinations, and then the government also saying that, okay, we're not going to go into ECQ anymore, it will be more granularized per area already. Will these three categories that I mentioned do better later on pa? Kasi it's quite evident that Jollibee's opening stores outside the Philippines aggressively, not here. It goes to show what they're seeing in the ground right now.
I agree with you, but again, even with what you have said, some of those can be ahead than the others. So I won't probably be looking at airlines, hotels, and hospitality to really be a front runner. But the fast food chains, once the malls open, you will see this getting robust, getting to grow once again, right? So even within that set, there would be laggards pa din. It's still, like for me, some sort of a K-shaped recovery where other companies and other institutions and businesses will be ahead, and then some will still be left behind. But I'm telling a lot of people, imagine this: how much of revenge travel would you think there would be once we're able to go out? I'm sure. I mean, a lot of people are thinking about it today. If you will have the chance, you'll get out there. You're going to travel. But as of the moment, we can't. So there is like pent-up demand, no? So will you be an investor while it's still pent-up demand, or will you be putting money when it's already out there? So the prices can be different. The prices can be different.
Any final words for the Philippine market? You mentioned kanina accumulate and then wait for things to get better.
No matter what kind of investment instrument or exposure there would be, the age-old concepts of asset allocation will never be beat. So again, we all calibrate it because obviously we started with who's going to do well within the pandemic, right? The exposures we had on the regular companies have been muted because we focused on who's going to do well during the pandemic. Now we're seeing things turn around with the vaccinations and all that. Then probably it would be great to start muting this and having a little more stake on, that side that's going to do better, that side that's going to have that turnaround story. So let us be more focused on that asset allocation program, because at the tail end of this, I even say we can even include the REITs. Look at how much yield they're paying you compared to the banks, compared to your time deposit, compared to probably even a bond placement. And then, probably it's a surprise. You get to realize kahit konti market appreciation pa. Di ba? That you still have to add to your dividend yield. So it's a fair deal. Now, I have to allocate part to that as well, right? I picked up some during the IPOs, but somehow at the very start, when people are not looking, I accumulated a little bit more. So now you're seeing that paying dividends. Moving forward, as interest rates, somehow simmer down. Kasi ngayon, syempre, with the inflation scare, people are thinking inflation can go up, interest rates can go up, REITs might get hit, right? But we all know the 5% inflation rate will have to be lower sometime, right? Because of the base as we move on to better things. So when that happens, rates could probably again go down, and the BSP can probably challenge the reserve requirement. They can go back to stimulus spending and to their bond market participation. So again, the challenge is how to be ahead of the curve. It's that challenge. But I'm not telling people, bet everything there. No, konti-konti lang. And as it unfolds and it follows what what you have projected, then add a little bit more. Pero nauna ka na. Mababa na yung average mo.
And I'll just add this. And what's interesting about REITs, because I'm a big fan of REITs, is they keep adding properties to the portfolio. So it becomes more valuable already. So may capital appreciation side yun. And not just that, parang you have more assets, mas madami ka mapapaupa, you'll also get more revenue. And I think in proportion to inflation is they're also scaling up the rental rates per year. So I think that could be a hedge that people are not really looking at as well.
Marvin Germo is a REIT investor long before we ever had REITs in the Philippines. So it's almost like you're investing now with the power of hindsight, because you saw this unfold in other countries, right? So it's the same storyline. We saw that, and it's the same storyline. It's just that somehow at times, Marvin, my frustration would have been, people never learn. History has shown that to you, but people never learn. This whole thing about accretive, if you notice, diba, a REIT fell to 2410. When it did that, I did a video. I had to ask permission from Ayala Land if I can do that video, because I was just feeling, the guys are not reading this correctly. They're looking at this as a regular stock, as a regular IPO. It's not. So you're gonna be frustrated if you have a wrong perspective. So what did I say? It was a great bargain at 2410. Look at where it is right now. So people would have made what? Over 50% plus all the dividends. I-add back mo pa yun. So sayang, di ba? Again, for many people, it was a wasted opportunity. But if they just listened to Marvin Germo, di ba? They should be a lot better off.
Their occupancy rate is 90+%. So it beats a lot of other people that I know na merong rental properties right now, tapos hindi ka pa maghahabol or mag-isip sa nakukuha ng tenant. It's a very, very good, I think, passive investment for everyone.
REITs are the mutual funds of real estate. You have a professional fund manager. You can manage your vacancies. In fact, the technical parts of REITs, a lot of people cannot appreciate. Yung, again, occupancy rate, that's one. How about the weighted average lease expiry number? So you would know when they're going to be, facing that fact of probably losing a tenant. For most of these REITs, it's 3 to 4 years. By that time, wala nang COVID. Right? So, these are the things. And I go back to what you said, which is very important. It's the accretive nature, because these companies, Mega World, Ali, Robinson's Land, they still have a lot to put there. And it's accretive value because they own both sides. They own both sides. What do they get is like many people siding with them or joining them in the business, which is what? A capital boost, right? For their own liquidity to use in their future development. So it's a win-win situation for everyone, actually. What is it about Tesla that goes beyond cars? Like people are saying, it's not gonna go up anymore because it's even more valuable than Toyota, than Nissan, than all of these other car companies put together. You're missing the story. It's not a car manufacturer only. It's going to revolutionize power. It's going to be revolutionizing the use of batteries. It's going to be revolutionizing transport.